Good morning, this is the latest market news. I'm Uliana. Asian shares were high on Tuesday, with Japan finding direction after a volatile start to the session. After a volatile start to the session, which saw the Nikkei flip-flop between positive and negative territory in early trade, the index moved higher in response to the weaker yen. The Nikkei stock average was recently up 1.1%. In recent sessions, trading in Japan has been particularly volatile ever since the Nikkei tumbled 7.3% on Thursday, the first major speed bump for a market that has rallied 65% since the middle of November. With both the US and the UK closed for public holidays on Monday, there was little overnight news from outside of the region to influence trading in Asia. In Australia, the ASX 200 was up 0.3% as gains in high-yielding stocks offset weakness in local miners. There were thin pickings across global financial markets overnight, with both the US and the UK remaining closed for an extended long weekend. With liquidity thin in the absence of any fresh data releases to catch the attention of investors, the strength of the US dollar witnessed last week has consolidated, driven largely by the expectations the US Fed could start to taper off their bond purchases sooner rather than later. After falling 0.4% against the yen on Monday, the US dollar gained ground against its Japanese counterpart on Tuesday, recently at 101.83 yen compared with 100.94 late Monday in North America. With the economic calendar looking equally as thin for the rest of the week, investors will be closely watching the US dollar to see if the strength accumulated last week can be maintained. Tuesday's update on consumer confidence in France will help guide expectations for Eurozone data releases this week. In the US, new numbers arrive on housing prices for March and consumer confidence for May. US Conference Board Consumer Confidence Index 14 GMT. Today's release will be closely analyzed for clues on the mood among consumers in the wake of wobbly retail sales data in the last 2 months. Consumer spending fell in March and rebounded quickly in April. The recent numbers fall short of clear signs of distress, but they are hardly reassuring. Index is expecting to rebound about 70, which would be the highest level for the year, leading to increasing speculation of sooner end of QE, as it will suggest a healthier economy. It was the latest market news provided by ICO FX. Goodbye.